All right, everybody, welcome back. We're diving deep today into the world of crypto security. In 2025, you guys know there's a predicted crypto boom coming, and you're thinking ahead, you want to be ready to ride that wave. Smart move. But, and this is a big but, securing that crypto. Well, that's a whole other challenge.
It sure is.
It's kind of like imagine you stumble on a hidden treasure chest, overflowing with gold. Exciting, right? You'd be thrilled. But then everyone hears about it. Now you've got a target on your back, and they're all trying to get their hands on your treasure. That's kind of what we're talking about here with crypto security in 2025, right?
A perfect analogy. You see, 2025, it's probably going to be huge for crypto. Everyone's talking about a potential bull run, which means, of course, more investors, more opportunities. But this is the important part, more scammers too, looking to take advantage of all the excitement.
And we're not just talking about small-time scams here, are we?
Not at all.
This is serious business. I mean, just look at the numbers. Last year, the FBI, they reported get this, 45% jump in crypto scams. Cost people, are you ready for this? $5.6 billion. That's billion with a B. So this is not a theoretical risk, my friends. This is real.
Absolutely. And what's really concerning is these scams, they're getting more sophisticated by the day. We're way past those dodgy emails. We're talking scammers impersonating officials, creating fake websites, identical to the real deal. They're even using social media to build trust, and then, bam, they exploit it.
See, that's what I'm talking about. It's scary stuff. But let's back up for a second. Before we get into all the scammer stuff, let's talk about exchanges. I get that they're like the Wall Street, the bustling marketplaces of the crypto world, but why are they not the best place to store your crypto? For the long term, I mean.
Excellent question. Here's the thing. Exchanges are fantastic for buying, selling, trading your crypto, no doubt. They're user-friendly, they're convenient, but you've got to remember this. When you leave your crypto on an exchange, well, you're trusting them with its security. And while the good exchanges, the reputable ones, they do have security measures in place, they are still targets. Hackers are smart.
So it's like leaving our treasure chest right back in the middle of that busy marketplace. You might be okay for a few minutes maybe, but you wouldn't leave it there overnight, would you?
You got it. That's exactly where the idea of what we call self-custody comes in. And this is important. The key to self-custody is a self-custodial wallet.
Okay, break that down for me. What exactly is a self-custodial wallet? And what makes it different from just having an account on an exchange, which is what a lot of people are used to?
A self-custodial wallet puts you in control. You control your private keys. These are like secret codes that give you and only you access to your crypto. On the blockchain, think of the blockchain like it's like a public ledger, right? It's where every crypto transaction is recorded for everyone to see.
So the blockchain is like the map of the entire treasure-filled world, and my private keys are the only way to unlock my specific treasure chest. That's a great way to think about it, right?
Exactly. You're getting it. And the best part is, with a self-custodial wallet, if you've taken the right security precautions, and we'll definitely talk about those, you are the only one who can access your crypto. It's like burying that treasure chest in a secret location, a location that only you know about.
Yeah, okay, I'm starting to see why this is so important, especially with all the risks we're talking about. But I have a feeling this is where things get a little more, technical. We need to choose the right type of wallet for the job, don't we?
You're absolutely right. And that's exactly what we're going to dive into next. Just like you wouldn't store a priceless diamond in your everyday wallet, right?
Yeah.
Different types of crypto wallets, they offer different levels of security.
Okay, so this is getting interesting. Tell me more. What are these different types of wallets, and how do I know which one's right for me?
Well, that's where things get even more interesting. Let's talk about hot wallets versus cold wallets. And don't worry, there are no actual temperatures involved here.
Okay, good. I was starting to worry I'd need like a special crypto freezer or something.
No freezers needed. But the analogy, it's actually pretty accurate when you think about how easy it is to access your crypto versus how secure it is. But let's explore that right after this.
All right, so hot wallets and cold wallets. Lay it on me.
Okay, so hot wallets first. Think of these like your digital wallet, the one you use every day, like Apple Pay or Google Pay. They're connected to the internet, always on, which makes them super convenient. For quick transactions, buying stuff online, interacting with all those, what are they called, dApps, those decentralized applications.
Wait, dApps? Okay, now you're just using fancy words to confuse me. What's a dApp? Besides an app about dogs, I mean.
Right. No, not about dogs. Think of it like this. Imagine apps, but they're not controlled by some big company, like a decentralized Uber or Airbnb, powered by blockchain technology, of course. That's a dApp. and you often need a hot wallet to use them.
Okay, I'm kind of following. But hot wallets, they're always online, right? So doesn't that make them, I don't know, a bit vulnerable? I'm thinking back to our treasure chest analogy here.
You're right, that is the trade-off. Hot wallets, super convenient. But because they're always online, they are a bit more exposed to online threats. It's like leaving your wallet just sitting there in a busy cafe. A skilled hacker could potentially find a way in.
Yikes. Okay, that doesn't sound good. So are hot wallets just like inherently unsafe?
Not really, no. I mean, think about it. The popular hot wallets, MetaMask, Trust Wallet, they've got really strong security in place. They're like those really well-guarded cafes in good neighborhoods. Plus, you can't beat the convenience factor. If you're the type of person who's using crypto all the time, smaller transactions, or you're really into exploring those deed apps, a hot wallet, it's a good option.
Okay, so it's about finding the right balance,
Yeah.
right? Convenience versus risk, just like carrying a wallet in the real world. But what about the, what do we call them, the Fort Knox option? Cold wallets. Those are supposed to be super secure, right?
Uh,
Why are those better for storing your crypto if you're in it for the long haul?
Imagine this, a treasure chest. For deep underground. No one can find it. No one can touch it. That's a cold wallet. See, it stores your private keys offline, totally offline, usually on a physical device, like a USB stick. And because it's not connected to the internet, well, it's practically impossible for hackers to get to it.
So it really is like a digital fortress for your crypto. What are these cold wallet devices like?
They're pretty neat, actually. Like, two popular brands are Ledger and Trezor. They look like those little USB drives, but they're packed with security features.
Like what? Give me the details.
Well, they use something called, hold on, got to get this right, a secure element chip. It's the same technology they use in credit cards and passports. This chip, it basically creates like a separate, isolated environment for your keys, so they're completely protected.
Whoa, high tech. But let's say, hypothetically, someone gets their hands on my cold wallet, my physical device. Is my crypto still safe?
That's where the second layer of security comes in, PIN code. Just like your phone, you need to punch in your ping-in to get into the device. And even if someone tries to, guess your PIN a bunch of times, most of these cold wallets, they have a built-in thing that wipes the device clean if you get the PIN wrong too many times.
Okay, now that makes me feel better. So it's like, I've got my physical key to open the chest, AND, I need a secret code to get to the treasure inside, double the protection.
Exactly. And remember that seed phrase we talked about? The really important one.
The master key to my crypto kingdom. Yeah, of course I remember.
Right. Well, with a cold wallet, it's physically impossible for hackers to steal that phrase remotely. You have to physically enter it on the device. So you're super protected from those phishing attacks and malware we talked about.
This is all making me feel a lot better about, actually investing in crypto. But I have to ask, this whole hot wallet, cold wallet thing, it
Yeah.
got me thinking, is there a way to combine them to get the best of both worlds?
You're one step ahead. That's a great question, and it's actually a perfect transition to what we're going to talk about next.
So you're saying there's a way to have it all. The convenience of a hot wallet for everyday spending, but the security of a cold wallet for the bulk of my crypto. How do I do it?
Exactly. A lot of experienced crypto investors use this strategy, actually. It's just common sense when you think about it. You wouldn't, carry all your cash around with you all the time, but
No way, I'd feel like a walking target.
exactly. Same principle with crypto. You keep a small amount, you're spending money, in a hot wallet. That's for those quick purchases, using your dApps, sending a little crypto to a friend, that kind of thing.
Right, so my hot wallet is like my everyday wallet. And my cold wallet, that's my super secure vault. Like Gringotts in Harry Potter.
That's a great way to put it. You've got the right idea. And just like, transferring money from your bank account to your wallet, it's easy to move crypto between your cold wallet and your hot wallet.
Okay, good. So how do I actually do it? Walk me through it.
Sure, let's say you want to send, I don't know, some Bitcoin from your cold wallet to your hot wallet. Maybe to use on a D app, right? First thing, open up your hot wallet app. You need to find your Bitcoin receiving address. That's kind of like your account number, but it's a long string of letters and numbers.
And I just, copy and paste that address into my cold wallet?
Almost. You have to connect your cold wallet device to your computer, punch in your PIN code, then you just choose the option to send Bitcoin, put in how much you want to send, and then very carefully paste that address from your hot wallet.
Carefully being the key word there. I do not want to send my Bitcoin to the wrong place.
For sure. Double checking that address, that's critical. And here's a pro tip, by the way. A lot of wallets these days, they let you save addresses you use a lot, like make a list of trusted addresses.
Mm-hmm.
So once it's on your trusted list, you don't have to verify it every single time. Saves you a lot of hassle and a lot of potential for mistakes.
Yeah, I like the sound of that. Less stress is always good, especially when we're talking about my crypto.
Yeah.
Okay, so we've covered a ton of ground today. Exchanges, self-custody, hot wallets, cold wallets, even those dApps we talked about. As we wrap up here, what's the most important thing you want our listeners to remember?
Good question. I think it's this. The crypto world. It's exciting, it's full of opportunity, but it's also got its share of risks. Scammers, hackers, the whole deal. But the good news is you can totally protect yourself. Choose the right wallet, keep those private keys safe, and you can navigate the crypto world with confidence.
It's like we're equipping you guys with the right tools, the right knowledge before you head out on this adventure. And believe me, it is an adventure. So everyone listening, stay curious out there, stay informed, and most importantly, stay safe. We'll see you next time for another deep dive.